Welcome to Analyzing Finance with Nick. In this video, I'm going to talk about the economic future of Malaysia and what opportunities are there for future growth. Malaysia is an interesting part of the world in Southeast Asia. It's peninsular Malaysia, touches both the Indian Ocean and the South China Sea, and is on the crossing point of the Strait of Malacca and borders one of the key hearts of global trade in Singapore. And Malaysia also has dominant positions in a lot of raw materials. However, a lot of their socio and political culture and the issues surrounding that has held the country back and had stuck in the middle income trap for the last 30 years, which is going to play out. And we're going to start first with what's going well for Malaysia. Malaysia has abundance of natural resources. They've historically been a leading exporter in commodities such as tin, rubber, palm oil, and crude oil. In fact, really, Malaysia's largest company, the state-owned Petronas, is their oil company, and then their next largest company is Malaysian bank, Maybank, which is the only one to make the Fortune 500 global list. When it comes to Malaysia, outside of their natural resources, the fact that there's not too many people in Malaysia is about 32 million people, and its population density is less than 100 people per square mile, which puts it at 17th in Asia in terms of least populated, densely populated countries, with really only Mongolia, Central Asia, and a few of the larger Middle Eastern countries having materially lower population densities. So the combination of an abundance of natural resources and low population density means that most of the resources they can produce can go to exports, and the wealth from exports has to be divided among fewer people to develop your country faster. Outside of natural resources, Malaysia has a relatively highly educated population and a high level of English speaking. About 55% of the Malaysian population is at least conversational in English. Both in those categories, in terms of education and English speaking, they're really only second to Singapore in the region. Historically, it's had a fairly strong monetary policy. Outside of the debacle during the Asian financial crisis in the late 90s, the Malaysian ringgit has been a fairly stable currency and has not depreciated much against the dollar relative to many other emerging market currencies, such as the Thai baht. The other advantage that really Malaysia has is it has a low cost of living. And due to a low cost of living, the nominal wages needed for people to live what is considered first world living standards is much lower than other places. I don't really know 100% on what the drivers is, but Southeast Asia overall, outside of Singapore, of course, has a reputation and a history of being able to have very affordable living costs. I think maybe it's to do with no winter. That's partially to do with it. The other thing, too, is that its low cost of living, first of all, allows people a lot more disposable income at lower levels of GDP per capita. The fact that our wages are relatively high there, they're the second highest level of wages in the ASEAN region, except for Singapore, it attracts a lot of immigrants from other parts of Asia, particularly China, India, and Indonesia, which are three of the largest populated countries in Asia, and they all have ethnic diasporas in the country. With native Indonesians, they're similar religiously and ethnically, even though identical to local Malays, so they could fit in pretty well. And then there's long-standing Indian and Chinese communities in Malaysia for those groups. Expats often move there too, particularly from Singapore, but also from other developed nations because it's a cheap place to retire or have a much larger property than you can afford in your home country. So those are the drivers for Malaysia that are going well. The biggest challenge for Malaysia is its local politics, its history of corruption, and its new Malaysia policy, also known as Bumiputera, and the human capital flight that is caused by Bumiputera. Bumiputera, if you don't know, is the strategic affirmative action policy that has been in place in Malaysia since 1971. Prior to 1971, the share of the wealth and businesses owned by native Malays was about 4%. Now it has risen to 23%. Their goal is to get to a 30% share of the economy by 2000. They did not do that. It's caused a lot of issues because the Chinese community owns the dominant share of the private sector there. And with them getting heavily discriminated against in terms of access to whether it's government jobs or education or outright cash handouts to the Malays themselves, has created a gap in each culture's work ethic. It's encouraged many of the educated Chinese community to move out and move out their investments and also move out human capital. And this has caused growth and development, especially in more skilled and innovative industries such as technology, to lag. That is really Malaysia's biggest challenge. At least on the bright side of that, recent prime ministers at least have commented that there is real damage to this policy, but they say that the costs are still worth keeping Bumiputra. In fact, really, for any company that wishes to list in Malaysia still needs to have 50% of its shareholders be Bumiputra, which also limits the development of its capital markets. So the last thing we do in these videos is we compare a country to a US state of either a similar size, land-wise, or economy. And the one that we have today is Colorado. Colorado is similar actually in land size to Malaysia. They're within 10% of each other. And their GDPs actually are also very similar in size. They also both have two pretty cool flags. Malaysia is heavily inspired by the United States of America, except in replacing the 50 stars with the Islamic crescent. And you have Colorado, which was kind of designed as the centennial state, which is 1 century later from the founding when it became a state in 1876. And it kind of has a more, I guess, modernistic, at least for the time, approach to the red, white, and blue. But again, as I mentioned in the geography, it's actually interesting, though, that the space between peninsular Malaysia and Borneo, Malaysia is actually almost the same width as the state of Colorado itself. Even though they're about the same size land-wise, the gap between Malaysia, one side to the other, is the same distance as Salt Lake City to Chicago. And let's just go with the facts here. The population is much higher in Malaysia, 32 million versus 5.8 million in Colorado. The GDP nominally is 415 billion in Malaysia versus 385 billion in Colorado. So it's less than 10% apart, but Malaysia has a lot more people. Colorado, as a result, is far wealthier. In fact, actually one of the top, I think, 12 states in terms of GDP per capita in the United States. Land area, they're similar. Malaysia's a little bit bigger, 132,000 square miles versus 104,000 square miles in Colorado. They both are historically, they got their economies originally built on natural resources, but have been rapidly diversifying over the last several decades. But even with that, energy and mining are still large percentages of their economies. Colorado is still one of the leading states for oil drilling and mineral extraction, and it's 6% of Colorado's GDP. With Malaysia, energy and mining is about 6.3% of GDP. They both have the same amount of global Fortune 500 companies at one. Malaysia, it's Maybank. Colorado, it's Aero Technologies. And then in terms of competitiveness rank, Malaysia ranks 8th among the 39 countries in the Asia-Pacific region. However, that's pretty high for Asia, but compared to developed countries, it's more middle to lower of the pack. It's about the same ranking as Spain, as we mentioned in that video, and as Israel, as we mentioned in that video. They're all kind of bunched together, Israel, Spain, and Malaysia. And then Colorado is 22nd, which is about middle of the pack for the U.S., but given the way it's politically trended, that is very high for a blue state. And I think with a lot of provisions in Colorado's constitution to limit taxation and government spending, I think Colorado is going to be the most economically competitive blue state for a while. So that concludes my thoughts on Malaysia. I think really the challenge of Malaysia is, can they get past the political third rail of Bumiputra and reform their economy to allow the growth of more dynamic, high-skilled industries? I think the next 3 to 5 years, Malaysia is going to outperform because high commodity prices, especially oil, really improves Malaysia's net exports, and they will improve the inflows that go into Malaysia's sovereign wealth funds, which helps the country invest. And yeah, so they benefit generally from high commodity prices. However, once the next commodity cycle plays out and that market normalizes again, I think Malaysia will underperform unless if it could handle its domestic issues. Thank you for watching.